let's start with the tech tie-up, which we told you about last week when it was in the works. It sent shares of EMC higher today. Dell is privately held. But is there a big risk to doing a big deal like this one? And which companies might be next? Josh Lipton has our report tonight.
Dell founder and chief executive Michael Dell will lead the combined company as chairman and chief executive. He says this deal creates an enterprise powerhouse.
We started back in about 2002, and for about a decade worked together. At one point, the relationship was about a $2 billion annual run rate. And, this is really all about bringing together complementary technologies and helping our customers address the challenges and opportunities that this digital future is creating.
Analysts say the IT hardware market, which includes companies selling storage and servers, still generates a lot of cash, but the stock prices have come under pressure because of the threat from newer technologies like cloud computing. And that means this is a market ripe for consolidation.
Being bigger, being able to protect cash flows, reinvest some of those cash flows, I think makes a tremendous amount of strategic sense given the stage that we're at, and frankly, given the tipping point that we see where some of these disruptions from cloud could actually start to accelerate now.
Braceland highlights one name to watch, NetApp. The data storage company, he says, is worth north of $35 per share in a consolidation scenario. NetApp, in a statement to CNBC, said that the Dell EMC deal does not fundamentally change the competitive landscape and, in fact, could provide the company with the chance to take market share. Of course, big tech deals pose real risks. For instance, HP bought Compaq in 2001 for $25 billion in a move meant to create a tech giant that could take on IBM. Critics charge that the acquisition was ultimately a dud, leading to a plunging stock price and thousands of layoffs. On the other hand, analysts are fans of Facebook's decision to buy WhatsApp for $19 billion. They see the messaging service potentially disrupting the telecom industry. Despite the risks, there is the expectation of more mergers in the IT hardware space. Consolidation could make real sense for companies lacking growth but boasting plenty of cash and cheap valuations. For Nightly Business Report, I'm Josh Lipton in San Francisco.